Hi everyone, buyer's agent Jay Pace here for Providence Property Group with a market update for the month that was April 2023. On this channel we talk about all things property, but most importantly I read the news and separate the facts from the fiction so you don't have to. We just got back from another awards night. Thank you to everyone who voted for us. It means a lot. So according to the experts, we are approaching the finish line and the worst of the Australian property market crash is behind us. Data from the big four banks, including Domain, CoreLogic, etc., are all starting to sing a new tune. And there's just a few of the articles that I grabbed recently that I'm starting to see about house prices tipped to surge and the property crisis is over, etc., etc. Whether or not this is true, I think it's just interesting because the market sentiment is definitely affected by the overall media message. So now that the media message is more positive, will that in turn create a more positive sentiment? There's definitely more optimism in the air, less doom and gloom, CoreLogic, Property Pulse, all these different things. Actually, I'm going to move my head because I made a nice little photo. There we go. Oh, what a feeling. So yeah, definitely that doom and gloom is starting to go away. Now, according to Domain's house price report, Australia's property market has reached a turning point and heading towards recovery. And the report showed that house prices across Australia, combined capitals, increased over the March quarter for the first time in 1 year. Australia's housing market has reverted back to a multi-speed market, one with cities that are showing much more balanced conditions. House prices in Sydney, Adelaide and Perth increased over March, while they stabilised in Melbourne and Brisbane. Weaker conditions are evident in the smaller capital cities as house prices fell over the March quarter in Canberra, Darwin and Hobart. So still bad news for renters as demand shows no signs of slowing down. According to the latest CoreLogic rental pulse, Australia's capital cities have recorded the strongest annual rental increase in history. Unit rents are continuing to outpace house rents in capital cities, with migrants and foreign students preferring more affordable accommodation, and obviously so do investors. A surge in overseas migrants and international students has led to a significant shortfall in rental listings. Purchasing capital cities rents are higher, so that's pushing capital city rents higher, and we're starting to see those prices go up. The combined capital's annual rental increase of 11.7% in the past year was a new record high. So it's just moving up. I mean, I've been going on about this for months now, probably since last year. I was saying that units are most likely going to have their day in the sun soon, and I think this is going to be one of the tipping points. Now, I wanted to share this with you. This dilapidated Sydney house in Greenacre was recently listed as free rent in exchange for the tenant completing a full renovation whilst living there. Now, I have no clue about the legalities of this, what type of contract you'd sign, what is a full renovation exactly. I don't know what they'd be doing here. But as ridiculous as this sounds, this Greenacre listing was actually removed by the agent from realestate.com and Domain after only 24 hours because he said that they were inundated with almost 60 phone calls from interested parties within only a few hours. Absolutely crazy. Now let's talk about interest rates. I'm so sick of them. I thought we were over this, but now they just threw us right back in. A market-defying interest rate increase came through this week. Despite inflation pulling back in the March quarter, although inflation is coming back, it is likely that it isn't moving quick enough for the Reserve Bank of Australia, the RBA. It is, however, likely to be one of the last increases that we're going to see for a while. I don't expect them to move it again next month. I actually expect this month for them not to touch it, and I thought that they might touch it in 2 months' time, but as soon as they gave us a false sense of hope, they came back in again. So we just have to keep watching, just keep riding this ghost train with Governor Philip Lowe, and we'll see what happens. So inflation was reported at 7% last week, and that's remaining considerably high as the RBA's target range of 2.3% is still quite a ways away. However, the good news is that inflation seems to be heading in the right direction, that's down, as it appears to have peaked in December and is likely to continue its downward trend. So despite this positive development, certain items are still contributing to high inflation, such as a 12.7% increase in building costs for new homes and a 25% increase in domestic travel expenses. Anybody that's tried to travel around Australia recently will definitely attest to that. I can't believe it costs $500 to fly to Queensland. Medical costs have also risen in the past quarter, but this seems to be one-time event that's triggered by a Medicare safety net that in January reset, and all the specialists are adjusting their fees at the start of the year. On the brighter side, international travel costs have dropped, and it was cheaper for me to take my family to Fiji this year than it was to go to the Gold Coast. And we're seeing, companies that are offering discounts on to clear out their excess stock. So although higher interest rates may not be able to control some items, they seem to be effective in curbing consumer demand for furniture, clothes, international travel, because people are buying less of these particular items. Now, despite the recent interest rate hike, which we just saw this week, it's likely that the rates will remain unchanged probably for a while. It takes time for the effect of interest rate increases to actually impact inflation. And with the slowdown in economic growth, the next rate movement is probably expected to be, if there is a movement at all, probably to be to the downside. So probably we'll start to see rates drop. So I know a lot of people are sick of me talking about population growth because I bang on about it, but it's really important. And the great and powerful Michael Matuzik actually was kind enough to summarize the most recent population reports. So the table that I'm showing you right now shows that the annual population growth rate is expected to exceed the previous decade, with an estimated 487,000 individuals per year from 2023 to 2033. So over the next decade, we're expecting over 487,000 per year. That's crazy. And that's compared to the 391,000 per year between 2011 and 2021. And I did harp on about this a little bit in the last video when I was talking about Kevin Rudd's administration during 07 and 08, bringing in just under 600,000 people during that time. And now we're doing over 650 during that similar time now. It's highly probable that the number of children and the size of the upgrader lifestyle segment will experience a rapid increase over the next decade. So conversely, the growth rate of the population aged over 60 years is predicted to be slower than in previous years. And if it holds true, there will be a significant need for additional urban infrastructure, and the most sought after housing will definitely deviate from the current supply trends. The second table shows that it is expected that the majority of population growth over the next decade will occur in capital cities. And that's capital cities with the highest concentration in Sydney, Melbourne, Brisbane, and Perth. Excuse me. I want to make a point about this. In my last video, I did a pretty big segment about how I get frustrated when I see some of these buyers agents that are pushing buying regional property. And I'm not talking about 70 kilometers from the CBD. I'm talking about 700 kilometers from the CBDs, from the main capital cities. And they've had this black swan event where the market's gone up, and the data now is showing you the majority of the population growth is going to be concentrated on capital cities, and it's going to be mainly Sydney, Melbourne, Brisbane, Perth. So I don't know what long-term data these people are looking at, but only time's going to tell, and you can only sell a dream for so long. So now let's talk about the winners and the losers for the month. So CoreLogic's Home Value Index shows further evidence that Australia's housing downturn is over. And the most positive trend in housing values comes amid a worsening imbalance between supply and demand. And we keep talking about this. It's the same thing. There's too many buyers, not enough property. And we're bringing in more buyers and we're making less property. But you can see that last month, Sydney performed the best at 1.3%. Second place there was Perth at 0.6%, and then Brisbane at 0.3%. And those two, second place and third place, Brisbane and Perth, I reckon they're going to be the best performers over the next 5 years plus. Mark my words. Now, after falling 9.1% between May 2022 and February 2023, Australian housing values look to have bottomed out. So posting a second consecutive monthly rise, CoreLogic's National Home Value Index has increased by 0.5% in April, following a 0.6% lift in March to be 1% higher over the past 3 months. And look at that chart. I mean, that's a very obvious rebound that we're starting to see there. April 2022, between April 22 and April 2023, we're seeing that rebound now, and it's going higher. Look at those highs that we've seen, obviously, from April 2021. I think that, we are definitely, there's pressure to go up again. This is actually a really good table, and I'm just looking at it because it's on my other screen here. This is from the Hedonic Home Value Index, their latest document. If you want a copy of this, email me and I'll send it through to you. It's free. But basically it shows, the onset of the COVID cycle. So we'll use Brisbane as an example. 41% increase in Brisbane from March 2020 until June 2022, which was the date of the peak. And then since June 2022, the recent peak to the trough, that market's dropped down by about 2.4%, which the drop went from July till around March. And then from March now, we can see that the market's come up again, and it's up 0.2% since then. So I think, it's quite interesting, and it's a good table to look at because it just shows a lot of information. Now, again, and I'll move my big head out of the way here. This is interesting because this is the total listings, and I show you this every single month. But the amount of properties that are listed across the rolling 28-day count here is 21.8% below the 5-year average. And I think from my memory, it was about 19% below the 5-year average last month. So this is just dropping. And you can see that curve there, that trend of that blue line. There's just less and less property on the market. And we're just bringing in more people. I just checked today. There's less than 50,000 properties for rent, and there's less than 250,000 properties for sale. That's across the entire country. And that's every type of property, by the way, every type of residential property. That isn't even half the amount of the people that we're expecting to come here before the end of this year. It's just... So you think property prices are going to crash? Let's look at some recent purchases, and these always put me in a good mood. What we're buying for our clients, just the wins that we're doing at the moment. So this was a first-time investor just dipping their toe in the water with a budget around $500,000. Our team purchased this beautiful 2-bedroom, 2-bath, single car space unit in a high-quality suburb, only 6.5 k's from the CBD, and a very short walk to the train station. We secured the unit through a sales agent, and that we got the contract pre-market due to an existing relationship. So we already found out about this sale before the property even went to market, when the contract was just written. The property was purchased 5% below market value based on recent sales, and we purchased it for $501,000. So it is a modern, above average sized apartment, and it's in a complex of only 7, and it's providing a 5.2% rental yield, which is being achieved at the moment. So it's just a great return. I mean, look at that huge 50 square meter balcony. It's very rare for an apartment. This was a real diamond. We were very lucky to find it. There is definitely some depreciation available in this building because the complex is less than 10 years old. And we purchased this at a time when supply for apartments is very low and demand is high. This is a huge benefit for us being in the market for over 17 years, because these relationships are what allow us to get these properties when they're so rare. Now, this is a growth strategy. We secured this property under very strong competition. There were a lot of potential buyers here, and the selling agent actually chose to recommend our offer to the seller because we had an existing relationship. And that's not a conflict of interest. The agent wants to make sure they're selling the property to somebody who they know they've done transactions with before, always brings them clients that are qualified and finance ready. That's it. It's in the best interest of the agent to get this property sold for their client. So they're obviously going to come to us first because we are qualified. Now, it's a beautifully renovated home with a popular single level layout. So it's a very nice, just big layout there. Very high land to house ratio of approximately 80% land, 20% house, which is definitely, suited for high growth strategies. It's located within a wide street within the a very sought after part of Brisbane. It's in a suburb. It's only 9 k's from CBD, so really close. One of the most elevated parts of the suburb. Now, the reason I say that is because we're buying in Queensland. Flooding can potentially be an issue. We'd never been a flooded area anyway, but even though historically there's no flooding in this suburb, we bought on the highest elevated part of the street, which for us is a smart play. Now, the suburb's significantly more affordable than adjoining suburbs, and we believe that this property has tremendous growth potential. So there's a high ratio of owner-occupiers in the area, which is always a good sign for affluence, and we paid $821,000 for this. We've rented the property for $650,000, which equates to around a 4.1% yield, which isn't amazing, but compared to the averages that we're seeing in Sydney and Melbourne, which is less than 3%, 4.1 is pretty attractive, getting something less than 10 kilometers from the CBD with a land component. I mean, it just makes a lot of sense. Now let's look on the west coast of our sunburnt country. This is a Perth purchase. It's a nice combination of growth and rent. Ironically, we purchased this property actually for an owner-occupier, not as an investor, but still great investment. This particular property is a large 4-bedroom, 2-bathroom, and can fit 6 cars on it because it's a 708 square meter block. Now the house was purchased for $590,000. It's giving us a 4.8% rental yield, a very attractive rental yield. Again, the people purchasing this are owner-occupiers, so they don't care, but we think it's pretty cool. It's 12 kilometers east of Perth CBD. It's 4 kilometers from Perth Airport, great in a suburb, close to shops, schools, parks, and public transport. It's a winner. Now, this one, we're doing more and more of these at the moment. This is a really good growth and rental yield strategy as well. So we bought this property for only $529,000. The house is going to rent for $580,000. So we're going to get, a good rental yield over 5% here. It's 26 kilometers south of the CBD. So it's a modern house, less than 10 years old. It's on a small block with low maintenance requirement in a great location. These are a very popular purchase by our clients purchasing in the western state, because they're from the east state, a lot of them, and they're just dipping their toe in. It's not too ridiculously expensive, $529,000. It's a young property. It's built well. It's not on a massive block, but it's not on too small a block. The maintenance is not going to be high. It's just a set and forget property. It's really, really good. We're very happy with this type of purchase. Now, if you like what you're seeing here and you want to be kept in the know with the Australian property market, make sure to like this video, hit that subscribe button so you can see my face pop up on your phone more often. If you would like to further your education, you can download our ebooks. The link is in the YouTube description below. I want to thank all of you for your time today, and I will see you next month.